Good morning, traders. It's 8 a.m. Chicago time on Wednesday, the 8th, the 12th of April, 2023. This is episode number 2447. US CPI today, in case you were sleeping under a rock somewhere for the last half hour. US CPI came out today and caused what was expected. So, I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. So let's take a look at what we've got. Again, US CPI out lower than expected. The inflation rate month on month for the US came in at 0.1%. Consensus is 0.2. The prior 0.4. So big beat there. Core inflation came in line, 5.6%, was expected at 5.66%. The prior's 5.5%. It's interesting, oil is pushing higher. We'll see how that impacts things. Inflation rate, the headline number, inflation rate year on year at 5%. The prior is 6%. Consensus 5.2%. So a big beat there from last month. Core inflation month on month is 0.4% in line, and this is a big one for the central banks, and so the market responded accordingly. I think the Nasdaq just crushed it, moved about 200 points in about a couple minutes. We still do have the FOMC minutes at 2 o'clock Eastern today, so pay attention to that. It's not over. ECB's Villeroy says we now face risk of entrenched inflation. Price growth has become more widespread and potentially more persistent. ECB's fully committed to reining inflation in. Fed's Harker says we have to be a little careful not to overdo it, and bank stress has calmed down but not over. Fed's Kashkari, he is less optimistic than bond market on speed of fall in inflation. Musk says Twitter roughly breaking even, believes they'll be cash flow positive very soon. Okay, I'm glad to be contributing my $8 a month to that. For today, we are looking at UK BOE, the BOE's Governor Bailey speaking right now. Bank of Canada rate decision at 10. We do get crude oil EIA inventories. Crude is breaking from this long consolidation, this really tight consolidation, breaking to the upside now. Remember, we've been talking about this, that it has gapped up on news of OPEC Plus cutting supplies about a week ago, and has been sitting sideways, and it just doesn't seem to be filling in the gap below or pushing higher, although it does look like a flag and it's likely to continue to break higher. So we'll see as we'll look at that in a minute. Fed's daily at 12. We have a $32 billion 10-year note auction at 1. FOMC minutes at 2. ECB's Villeroy again at 2:15. BOE's Governor Bailey again at 3:15. The employment change out of Australia this evening, and balanced trade out of China at 11 o'clock p.m. Turning to the S&P, the S&P has a multi-distribution profile, was completely balanced, completely sideways until the inflation release. That's kind of, stating the obvious. But look at the volume suddenly popping. Yesterday it was like 120,000 at this point or something. Volume popping up to where we would expect it to be, which is 280,000 or so, getting close to that. And then we're looking at the range of 44 points, so plenty of movement here today. 44 points in the S&P with the point of control at 41.3875. The market's accepting these higher prices. Remember, we closed around 36.37 Monday, Tuesday, and we had an upper distribution last Thursday in the region, and now we have a point of control, an overnight point of control in the same space. So that's where we are. The high of the session is 41.7775. The low is 41.33. So that's it. We're seeing silver pop higher. We're seeing, there's been quite a bit of movement in gold. In case you haven't been watching gold, quite a bit of movement there. Gold has moved from about 1,600 to 2,000 over the last, I don't know, 6 months or so. And of course, there's movement in the treasuries as well. And Bitcoin continues to hold the 30,000 levels. So things that are priced in dollars are moving up. All commodities priced in dollars, per dollar, on a per dollar basis, are moving up as we would definitely expect them to do. So, what's going on here with the number of viewers? Did we not? Okay. Very cool. All right, so let's take a look at the charts. Actually, first, let's take a look at this. This is from yesterday. This is yesterday's videos. It shows right up here. You'll see that it says yesterday, 4/11. Yesterday, because we closed at highs, we talked about this at length here. The open was expected to dip down, expected the overnight low to be taken out. I talked about this. Expected it to be sideways, but eventually was looking for it to squeeze higher. I talked about this again later in the video somewhere. Let's see, somewhere in here. Let's see. Et voila. Oh, no. No. Wow. Pretty precise. There it is. Talked about it again, that we have tried to crush this 4,100. We had basically a double top on the way up. We finished strong on both sessions here, and the expectation is really pointing at taking out the weekly high of 41.6375. I said that number a couple times yesterday, and now we're running even higher. So pretty well forecasted by the market. And then looking at where we are now, this is yesterday. This is yesterday here. Come on now. Can't draw. All right, what's going on? I cannot draw. All right, there we go. So very balanced yesterday, right? So this is what was expected. We would sit kind of sideways and then eventually start to squeeze up. Remember, I talked about, even though we had weaker structures below, what the market is not doing is it's not giving up. It is not giving up these higher prices. And so we are likely to get a continuation higher. Likely to get a continuation higher. We're just simply looking for a catalyst. Okay, so today what we have is we are opening at, in the 41.50 handle. By the way, in case you don't know, the SOC, the scene of the crime for the CPI, is 41.3875. In the ES, it is 13,052. For the NQ, that's where we launched from. Got to mark that on your chart. And then for the Russell, it's 1806.8. 1806.8. You got to mark those numbers on your charts because that's where the auction was disrupted. It was a planned disruption, so it's we'll see what it does. But if we rotate down, those are the areas you're kind of looking for. So if you look at where that is, the 41.38, that's just above settlement. It's right in here. And we've pushed from here to 41.77, and we're sitting basically around the mid of the session. The mid of the session is 41.5575. 41.5575. And we're sitting here with the high of yesterday sitting at 41.51. So what we have here is that we are gapping up. We have mid in the area. We have VWAP at 41.54, mid at 41.55.75. Let's just round these handles. Mid is at 41.56. VWAP is 41.54. The high of yesterday is 41.51 or so. So this area here has a little bit of confluence, and we've nicely closed these single prints from the high day last week. And so we are really primed to kind of base from here and potentially just start to squeeze higher. Let's look at the intraday ES. Here it is. This is RTH only. So yesterday we did a great job, just kind of boring every trader around the planet to death. Just fantastic job doing that. And then we started to just walk and walk and walk higher lows on a 30-minute time frame. And then on the close, we took all of that back and just came right back to settlement, to the prior day settlement, to settle at 36.5. The prior day settlement's around 37. And then again, that's where we took off from on the CPI release. And yes, again, we have 55, 56, 54, and 51 all sitting here. The prior session high, the prior session high, the VWAP, full session VWAP, full session mid, all sitting stacked on top of each other. So it makes this kind of a support sandwich area, at which point, if we get below the 41.50, it's the mid-century figure. If we get below 41.50, then I'll be starting to look for the gap to settle trade back to 41.3650, and for the SOC to be closed. That's not expected. Otherwise, you're really looking at a market that is likely to continue to squeeze higher. From here, we have 41.80, which was a double top or a weak high, and then from there we have 41.90, which has a little bit of resistance up there, and then we get to 4200, this century figure up there. Okay, and then beyond that, we're back in like September prices or something. So not very much to fight against a squeeze higher. Now we have a bit of a catalyst to do so. Let's take a look at the auction up close and personal. Again, here's yesterday. The blue profiles are yesterday. The orange profiles are the blue profiles are RTH. The orange profiles are extended trading hours. And we've just, we mainly sat back here for the entire session. Here's the intersection of CPI. We sat here for the entire section. We had the overnight point of control, VWAP, mid on top of each other until the CPI came along, and it squeezed higher. It actually squeezed farther than expected. Just a great day, or a great example of a day where event contracts would be very effective to trade this release. Look at the sandwich of stuff up there. We have one vol sigma. We have a stock zone at 41.78. We have a weak high of 41.80. There's a lot going on up there, and then also there's a lot going on down here. See the mid, VWAP, but if this fails, see, this is the Monty Hall thing. If this fails to hold on the open, if we push down, we fail to hold these prices, it creates an interesting, 15-point move back to potential move back to prior settle, and that would be the setup to the downside. But for now, there's just no sense in fighting this. You could see the mid held to the tick. See it right there? It's not a mirage. It happens quite often. Right against the mid there. pull right against the mid and is bouncing back up, and then we have this zipper of resistance that we're fighting against here. And what we want to see on the open is, what does it do with that zipper? Let's zoom in a little bit here. So what am I talking about? I'm talking about if it opens in this area, I'd want it to see it clear this zipper right here before I look for a pullback to get long, to aim for the overnight stat to the upside with the trend of 41.77. So the trade setup would be, wait for it to push through, let it pull back to around 65, 66, as long as it stays above our reference area right here. Then we're looking long. Wait for it to pull back to 65, 66. Aim for the 77. It's about 11 or 12 points of range. That gives us the overnight statistic, the quantitative stat. And then from there, it's anybody's guess what it does. So, in addition to this, we're likely to get POTUS speaking. We're likely to get more Fed speakers issuing opinions and telling us how great of a job they did and all that stuff. So this is what's expected for today. Again, the secondary scenario, if it pulls back, struggles here, and breaks through into the prior range that I'm going to look for, what am I looking for? The quality of the pullback higher, the quality of the push higher back into this 54, 56 area. If it's poor quality, in other words, it's lifting, but price isn't making any gains, then it sets up a short from here around 51, 52 down to 36 is what I would be looking for. The point of control of yesterday and 36, both in the same area, 37, 36 area. That would be the secondary scenario. The primary scenario is right up here. Okay, so that's the price map. That's what I'm looking for. Let's take a look real quick at just what the others are doing. There's your NASDAQ. NASDAQ, same kind of scenario, has cleaned up a lot of the weak structures above, has overlapping value. NASDAQ breaking higher. NASDAQ pushed quite a bit. It actually started a little bit below prior settlement, whereas the S&P started its settlement and is holding up here. The NASDAQ's in a different situation, and NASDAQ has to hold 13,100 to continue to squeeze higher. The NASDAQ also has its overnight stat to play with. Again, long bias there. Crude is really the interesting one. Crude has gapped up and has held so well. Let's get rid of this profile here. Up, up. Look at these lows. Look at those lows. Like, this is just incredible work right here. 79, 65, 61, 72, 84, 61, 64. I mean, wow, that is some serious support there. And then we finish strong on a P-shaped profile, which is a short covering profile. We opened at the low end of the range yesterday. Look at this. We opened at the low end of the range. We fail to push lower. Remember, I was talking about, hey, keep an eye out for 79.50, and it finishes at the top end with the point of control at the high end of the range, and so we expect it to continue higher, and in doing so, it took out the prior high, and it's breaking to the upside. Crude's getting more expensive. Run out and fill your car today. So this is, crude for this entire region has shifted the point of control, the short-term point of control, to 80.50, 80.45, and is moving away. This is initiative behavior in crude. It's well supported, and off to the races it goes. So crude is not a short right now. I just don't see the short there in crude. This is the NQ, lower highs, higher lows, lower highs, higher lows, and now we have broken higher, and so the NASDAQ really has some decent fuel to work with here. since it's trading up here. So the Nasdaq, any pullback would look to me like it is as long as we stay above 13,100. The Russell also a very interesting trade here. Let me get rid of this profile. Very interesting trade. It's the weakest of the indices. It got absolutely pummeled by this banking crisis, and is really having a hard time. You see where the Russell is: high, pull back, impulse down, pull back, continuation, pull back, consolidate, reverse, higher low, and now starting to drive higher. And it's just the way the Russell is set up is that it's really got this real clear line in the sand right up here at the 1820, right? The 1820 area has been battled about, well, it's actually 1825, 27-ish, I would say. Just a big battle line. So the question is, does the Russell that's trading 1819 currently, does it get above that 27, use that as support? And what the Russell has is this thin area, and so the Russell's really set up as almost like a swing trade long kind of ideal situation here. Nothing's guaranteed in trading, there's always risk, but if it clears this 27 area, this 25, 27 area, it has a very thin profile to work through all the way up to 1880, and that may happen very, very quickly. And it's been weakest, and it's got a lot of catching up to do. Essentially, the Nasdaq, the ES are trading up here, the equivalent of up here, and there's a lot of kind of disparity between the ES, NQ, YM, and the R2Y currently. And we understand why. It's got a lot of small financial firms whose stock that got really beat up. So I'll leave you with that. One thing I want to announce though, next Thursday, not tomorrow, but next Thursday at 1 p.m., we're going to be doing a public webinar sponsored by Convergent Trading, offered by Convergent Trading. We're going to be talking about charting the Convergent way, basically looking at charts and walking through the process of distilling down the price action into a price map, and breaking it down to what stock zones are, why we use them, and how we look at setting up a trade. So to sign up, point your browser, go to ct.pro/charting-webinar. Again, lowercase, go to ct.pro/charting-webinar, and you have this link in the YouTube live chat. Of course, it's available on twitter.com/conv trading, CONV trading, if you're on Twitter. But be sure to attend. It'll be on YouTube. Nobody's asking you for your information. You can show up, and of course, it'll be recorded and distributable right away. Good luck.